Welcome back to the channel, Crypto Trend Trader with an evening market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Boy, do we got a lot to talk about. Nothing unexpected, obviously. We did have Jerome Powell speak today on behalf of the Federal Reserve. And, basically exactly what we expected to happen happened. He basically came out and was extremely dovish like he has been, and markets still sold off violently. We saw it across all markets, everything, cryptocurrencies, traditional markets, gold, silver, everything dumped. So let's talk a little bit about how we knew this was coming, why we knew it was coming, some of the longer term expectations, and also, essentially targets. So let's start over here, and I'm going to run down everything today. I'm going to do the 10-year US dollar DXY. I'm going to do a bunch of the traditional markets, commodities, gold, silver, and then I'll do some cryptos as well. So we'll basically just run on down the list. So let's start with the 10-year. No surprises here. We broke out of this channel that we've been interacting in once we were above the 200 exponential and simple moving average and started to get the upslope on the blue moving averages here. It was very clear that we were in fact in an uptrend. This uptrend was operating inside of our channel right here. Finally came up to the 377, broke through that, broke through the 528 moving average at the top of the channel, got the measured move exactly like we said, consolidated above the 618, came down, got our retest, broke back above the 618, and now we're finding support. Exactly the same thing that we did right here. Broke above the 5.5, found support, and then kept moving up. So what's going to happen? We're going to continue to move up. We're at the 1.55 today, and I would expect our next target to be the 786 based on Fibonacci retracements of the overall downtrend. The bullish retracement of the bearish dump is going to take us up to 2.08. So 2.08 is our 10-year target. No surprises here. It's all in the charts way before it's ever in the news. So while people were looking for, Powell to basically come in and, say, oh, we're going to do yield curve control, or we're going to go to negative rates or whatever, Powell just came out and said the same thing he's been saying. I don't see inflation. If there is inflation, it's just going to be a little bit of inflation. It's not going to be like regular inflation, which he's actually telling the truth because it's deflation. There's deflation happening, which is why they're printing a ton of money and giving it to people, because the economy is deflating. And in order to keep a balloon from deflating, you have to continue adding more air into it. So imagine now you have a balloon with massive holes in it. There's little holes poked all over the place. You can't just add a little bit of air. You have to add a ton of air, because as you're pushing air into the balloon, there is also air flowing out of the balloon. So that's exactly what's happening right now. And until the economy is actually starting to recover, which might take another few months, it might take another few years, could take a couple decades, depending on how they play this and how intelligent they are. We basically have had this bubble that has almost popped multiple times, and they've stopped it from popping, and now here we are. So let's jump over from the 10-year and let's take a look now at the DXY dollar index. We've been dumping, selling off violently for some time now. We basically topped out, obviously, when everybody got scared back here in March, with the cerveza sickness, and then we were operating inside of this downward channel. Same thing, broke out of the channel. This is our measured move up here. We knew we had broken out of the channel back here at the 90.76. We knew we were going to break out of the channel when we found consistent support at the heart line of the channel after touching the bottom, came up to the top, broke out, came down, retested it, broke up again, put in a lower high, and exactly what I said happened. People were going to say, oh, there's a high, that's a lower high. Here's a low, that's a lower low, we're going to sell back off. But no, that's not what happened. We have our low here, we have our high here. So the point was we needed to stay outside the channel and we needed to close a low above this one. Just not take out that low, which is exactly what we did. Right after that, we got a bullish engulfing massive gap up candle right here. Crossed the 8 and the 21 back over on the daily. Got another massive candle today. And what did I say was the main thing to pay attention to when we take out this high, which we did today, and now we're above it again. So we have a low, we have a high, we have a higher low, higher than this one, and now we have a higher high. So we could immediately start selling back off. And again, we are now in an uptrend on this. There's no denying it. Next target, still going to be the 200 exponential on simple moving average up here, 92.78. So basically 93. But the measure move is way up here. Still got plenty of ways to go, but I would expect it to come in somewhere around like the 95 range. So if you're not using these indicators, highly recommend you use them. They are free on TradingView. The descriptions or names are down in the description. Feel free to go check them out. These are all indicators that I have created to simplify the markets. You can follow right along. Also, my chart link is in the description, or you can just plug that in on your browser, and it will pull up my I think it's usually my Bitcoin chart. I try to keep it as a Bitcoin chart. So let's take a look now at traditional markets. So we got the S&P here. We were same exact thing we've been talking about. Bottomed out here in March. We have our fib levels in place. That's what these blue lines are right here. Let's turn off our moving averages for just a sec, and we'll take a look at what's going on. So that's our bottom down here from the sell-off. That was our potential top that I was talking about back here in blue. We have not made it yet to the 236 of that macro move, but we went ahead and fibbed a micro fib inside of this channel from $316 right here on the SPY, and that $316 range to the top up here at $395. When we sold off today, we hit the 236. What I'm paying attention to also is from the bottom right here, we have that touch point right there, and then we essentially like sold off outside of that little triangle that we were forming. But here we have, I don't always like to use the macro bottom or the macro top, because often what happens is there's like a final thrust of extra strength that overshoots targets. So I'll often skip like the main point of a trend, whether it's an uptrend or a downtrend. But you can see here we were putting in consistent low, low. We poked out of it and then didn't break the low right there. And then here we came and touched that low again. Here we came and touched that low again. And we were getting squeezed inside of, let's go to a long time frame for a moment here, and let's pay attention to what's really going on. We have this massive trend that we have been operating inside of since back in 2009, essentially. And that's what our fib bottom is from, that 2009 low. That's over 10 years. We've been operating inside of this channel, essentially. We had that one stab when we broke down in March out of it and like got that double bottom right here. But now look, that is our resistance that we're paying attention to on the monthly. So now let's go back to the daily. That is this resistance here on the daily, that big red one. And that's this support right here, that big blue one. And that was a stab outside of it, but we were able to get back in at no time, retested it, and then continuation, new all-time highs. So now, if we look at the measured move of these two triangles, the purple being the larger of the triangles in blue and red right here, the green being the smaller of the triangles in green and red right here, we break down out of this, we would expect to get the measured move of those triangles. One would take us down here to the 0.5 in blue, and the other would take us just below the 618 in blue. So what we're paying attention to now is, where does that line up? That's basically the bottom of the channel right here, the blue being that macro channel, the red being the top of the macro channel. So this breakdown today, basically we closed at the bottom of it for the second time here, and then tried to pump up, failed, got rejected, and sold off violently. We closed just above the 236, but we tagged it for the first time. So that was our 236 bounce. I would expect us to come back up here, retest the breakdown of the green line here as resistance now. It was support. We break down from it, come back up, test it as resistance. It's an SR flip. Support has become resistance now. And then I would expect continuation to the 382, and then just start testing these various levels of support from the way up. So that would be 364. The 0.5 would be down here, and it's also those previous two tops right there at 354. And then, obviously once we get down to that 236 and 618 area, that's a potential area we'd be looking to bottom, depending on how violent this gets, at that 340 range. But if we get down here to like the 382 or the bottom of the channel, we're looking at like a $300 S&P, which is essentially, from basically that 400 point down to 300 point, it's a 33% sell-off. We could, again, break outside of this, do a similar situation like this, put in a higher low still and remain in an uptrend, but actually break out of this and get basically like a 40 or 50% sell-off. And it's not unrealistic. Now, it's a little early to be anticipating this move to happen. We're basically just up here, but, it's not unrealistic to think that we could get a nice, big sell-off in these markets, a bubble pop scenario followed by, continuation of the uptrend on the macro. So we need to pay close attention to that. We hit my exact target. I said 375 in the last video. We sold off past it, pulled back up. It's like clockwork. It's not that complicated. I'm very clear about how I do my technical analysis and very consistent. So if you just pay close attention, you can learn all this stuff. The idea of these videos obviously is more to teach you than just have you tune in, twice a day and see what I think. I want you to actually pay attention, take your time, and actually learn how I'm doing this. So once again, we're looking at the Russell right now. Same situation on the Russell, topped out up here, at that 230 range, exactly where we said, sold off violently, came down exactly to the 236 of the fib, which was $208. Just above it, found a little bit of support on the 50-55, the green moving averages here. I would expect once again, now that we have that 8 and 21 confirmed to the downside, typically what happens is we'll get an attempted bounce back up to save it. So potentially come all the way back up to like 218, 220. But right now it's looking like we're going to see continuation, overall to the downside down to like that 89. So $200 is right around the corner for this, depending on what we see going into Friday. Typically when we see a violent Thursday like this, we will attempt to save it before the close on Friday. If we do not, if we see a very bearish close on Friday, I would expect it to get continuation on Monday. So, we'll see what happens. Let's take a look at the NASDAQ. I'll go through the indexes first, and then we can kind of like Jen Psaki circle back and nail some of the other assets as well. So here we got the NASDAQ, same situation. We got the 8 and 21 cross, sold off, hit our exact target down here. This is even more bearish. Obviously, tech is selling off violently, especially with the overweight on some of these like big caps. So we nailed the 236 immediately, came down to the 89 moving average. Next target's going to be that 382, 133. Now, we already got the sell-off, attempted to come back up. Here we were looking at a cross, sold off, came back up, tried to prevent the cross, just like I was talking about, failed, and now we have the cross to the downside. So we're going to pay close attention to that. But at this point in time, this thing doesn't look hot. None of the markets look hot. I would expect all of them to move together. But overall, tech has been taking, some pretty big hits. And, probably is going to continue taking big hits because they are, basically the most overvalued of anything. So let's look at the Dow Jones. Dow Jones has like long-term similar situation going on, except for this one is one that I really like to pay attention to. We basically have a microphone, a broadening wedge taking place where we have a low, a low, a low, a high, a high, a high. We have 3-point touches on each one of them, and this is essentially a massive distribution pattern taking place. We are at the top of this massive channel right now. When we got that last sell-off right there, we sold off down from 29,600 down to 18,100. This time we came up higher to 31,900. If we do the same thing, we have a high, then we sold down to the low. Then we went all the way to the high, then we came all the way to the low. Then we went all the way to the high, then we went all the way to the low. Then we went all the way to the high. So what's most likely going to happen this time? We're going to come all the way to the low down here at that 200 exponential or 200 simple moving average. So that's like a 50% sell-off. 16,550. So, I don't want to get overly bearish on this again, but, once again, pay close attention to this because, what happened last time, we put in a top here, and then we put in a higher high with a lower high, and then we put in a higher high with a lower high, and then we got massive bearish divergence play out, and that was our huge jump right there. So now look between this macro point right here and this macro point right here, we have a high, that took us up to right here, and then we have essentially a potential lower high right here that took us up to right here. So once again, we could be looking at a macro bearish divergence taking place on this, which could result in that massive sell-off back down to the 200. Now, obviously, first targets would be to retest like the 8, the 21, the 50s. But, you see how fast this happened here on the monthly. So let's go to the shorter time frame now and take a look at what's really going on. So we basically tried to get out of this, couldn't do it, tried to get out of this. Looked like we were going to get a massive breakout and then sold back off. And now here we have the 8 and 21 crossing to the downside. We got our hard sell. We're selling off violently. Already took out the 50-55. Found a little bit of support. Again, could come back up here and test this as resistance after it failed to act as support. We could test that 8 and 21 cross, but then our next target's going to be 30,000. 200, followed by our, this is a key resistance point right here that would act as a strong support if we came back to it. We also have a massive gap that never got closed back here. So if we start coming down potentially to like that 29,000 range, I think it's very likely we're going to come down here and try to close this gap. So if you see us coming close to 29,000, might as well call it 28.5. And that's our 200 exponential and simple moving averages. Excuse me. All right, now let's move on to some out of the indexes and into the trash. So we have MicroStrategy, Michael Saylor's trash bag project. It was obviously garbage. Got pumped up by his marketing campaign that he ran for Bitcoin. So let's see, from our top up here at 13,000, it is already down 50%. This is probably one of the worst performing stocks in the stock market from the top down. And this thing could really get hit bad if things start to really get bad in the markets overall. If other things start to take like 40 or 50% hits, I would expect this thing to take like an 80% hit. It's a BS company turned fake, index fund basically. So, fake ETF. It's basically just a phony Bitcoin investment. The actual company's garbage. He's gotten in trouble with the SEC before, paid massive fines to keep from going to jail. Didn't step down as the CEO of MicroStrategy. Came back from the shadows. Now after having basically a useless company, this thing was worth nothing for years. It was worth nothing. Continued in this nothingness range, $150. Sold off, was dying, putting in lower highs, and then now here comes Michael Saylor talking about Bitcoin, and it's going parabolic. So what do you expect to happen in this thing? I would expect it to absolutely get decimated. Where are we looking at target-wise? Probably 545 is our next main target. We're already down to the 50-55. We've already lost the 8 and 21 moving average. Some of these key levels on the way up are going to be key levels on the way down. So 372, I think there's a very high likelihood that it loses another 50% of its value fast if we see things starting to sell off. It's worth paying attention to that we are now in the bearish control zone. We could start to see like a bounce right here, but look, we had the bulls in control, bulls in control, bulls in control, bulls in control. Nowhere, anywhere in this range since last March, 1 year ago, when we saw that massive sell-off, did we ever see the bears in control. Now the bears are in control, and we're at the top of a massive parabolic bubble. So this means nothing to me right now. If anything, this is extremely bearish to me. And the last thing I would be doing, normally if you're in a strong bull trend and you sell off violently like that, you would expect there to be like a pretty good bounce on it. But you got to be very careful because this looks more like a change in trend to me. We've had a trend for over a year where the bulls have been massively in control and it's been going parabolic. So when the bears take over control, and it's not like the bulls aren't trying to fight back to save this thing. They tried here, got destroyed. Tried here, got destroyed, and now I would expect the destruction to continue. From the bottom to the top right here, we have already taken out the 236 on the macro. This is probably the worst performing stock since the top so far that we're seeing. Next target after that 236 got blown away would be potential come down here to like that 469. The 0.5 is down here in line with some of that previous support and some of these, Fibonacci levels, 200 moving averages, etc. 341, could that potentially be, a bottoming point for this thing? Yeah, I think it definitely could. I think that definitely could see 75% of this thing lose its value. So we'll have to see how it plays out. Let's take a look at what do we want to do? Okay, let's look at some uranium. Uranium is. People are starting to pay attention to this thing, especially with like the Green New Deal stuff, energy sector potential here. I think uranium has massive potential. It has been in a ridiculously long bear market. It is probably the most undervalued thing in existence right now. This goes back to 2011. This is uranium ETF, the Global X Fund. It was at 129. I think around this time, uranium was like $50 to $75, somewhere around there. I'd have to actually look to tell you the truth. But it was at 130 back here. It's been massively selling off. Huge downtrend for basically a decade, 10 years. And, now we have crossed the 8 and 21 on the monthly. We crossed them back in November at the end of the year. As soon as we did, we got a massive burst up to that 55 exponential, consolidated, and got a massive burst up again. We could easily see this thing sell back off down here to like 15.36. But, realistically, our next target to the upside is like $22.38. We're currently at 17.69. Let's look at the weekly on this thing. Same deal right here. This is important what happened here. We were operating underneath on the weekly. We were operating underneath the weekly 200 moving averages for literally, the better part of a decade. And now here we have broken above them, came back down, found support above them. First we, found resistance, found support, busted through. Is it possible we come back down and find support as low as like $12.50 or as low as $14? It's definitely a possibility. We're getting the hard sell, leaving the bullish control zone. But this thing, as far as I'm concerned, has flipped over the 200 exponential moving average. Now has a positive slope to the upside. 200 simple is right at dead even, like flat. So, there's only one place it can go as long as price action is above it. It's going to start tilting up here unless we sell all the way down below 12.50. So this thing has massive potential. The absolute best time that, in my opinion, you can get into an asset is when it goes from a long-term downtrend into a long-term uptrend. So we have confirmed that trend. It is now going to take place. And in these commodities, these trends last for like 10, 15, 20 years. I mean, think about how long it takes for essentially a uranium mine to come back online and supply to start coming. And in order for uranium to basically be like worth selling for most of these companies, it needs to be closer to like $50. So you're talking about actual uranium basically doubling from here. So, these miners, these ETFs tend to outperform exponentially. So, we could see this thing, from 1769, if you just start looking at basically like, fibs from like our previous like tops back here, look at what we have to offer. I mean, there's massive potential in this thing, but again, this is a long play. This is not going to happen overnight. We made it to the 236 back here. That was $14. Almost made it to the 382, which coincides with the 377. That's $21.89. But like the 0.5 is up here at $30. 618 is up here at $43. 786 at $70. So, this thing has massive potential from where we're at right now. Oops. But again, we could see more downside action before we see upside action. But, we're talking about 75%. We're talking about 150%. We're talking about 300%, potentially even taking out the all-time highs. But let's not get ahead of ourselves. Uranium has a bad overall like outlook. People look at it as bad because of like previous problems with nuclear reactors and all that stuff. But in all reality, for the actual output and, carbon footprint of energy, think about what coal takes, what oil takes to burn. We got to dig it up. We got to use oil to dig it up. We got to refine it. We got to burn it. It all leaves massive carbon footprints. Wind turbines, we got to build these things. You got to rebuild them every like 10 or 15 years. Solar panels, all this stuff compared to nuclear power is massive underperformers. But for some reason, nuclear power, because of like accidents in the past, has got like a bad like reputation. But in all reality, think about how much time has gone by, 30 years, 20 years, 10 years, how much better technology is now. So now instead of like heating up like radioactive water through these pipes, now they're using essentially like saline solutions, like salt solutions, so they're not under high pressure because they can maintain a massive amount of heat. So now they don't have the same risk of causing like nuclear meltdowns and stuff like that, or explosions, because the high pressure explosion and then leaks out all the radiation is what causes these problems to begin with. So, uranium is definitely a massive long game play here that I am very interested in, paying attention to, invested in, whatever you want to call it. So let's switch over now to Tesla while we're talking about energy and whatnot. This is, one of those crazy situations. I don't know what's going on with these misprints. There was one that previously happened back here. Now we're getting another one. I don't think Tesla made it all the way back up to $875 today. I think TradingView is having issues here. There was another one here. They came in and corrected it like 2 days ago. Now we have another one showing up right here as well. I didn't see anything like that happening in the actual markets. So I'm assuming that TradingView is just having some random issues. We'll see if this gets fixed. But basically, called the top back here, at this $900 range. Still short on Tesla. Shorted 900. We're down here, already hit our $600 target. Down 33% basically. I would expect continuation. Back here, even if you took the short, when I was saying back here at the 821 cross, that's $823. We're down another 200 from there. That's like basically over 20%, 25% down. Again, bubble stock, extremely weak. People are getting absolutely decimated in this. You can see like the fanboys, like Meet Kevin, just like freaking out and scared about everything that's going on right now. Keep in mind, these people, you have to be very careful with these people that are fanboys of one thing, like Meet Kevin and Tesla, or Peter Schiff and gold. All these people will tell you, I've been bullish on this for 5 years. I've been bullish on gold. I've been telling people for 20 years. Well, that's not technical analysis, because that's not useful to anyone. If you've been saying something's going to happen for 20 years and then it happens, how does that benefit anyone ever? I use technical analysis, and it's dynamic. If I'm wrong about something, I get back into it or out of it accordingly. You need to be nimble in these markets. You don't need to be a day trader. You don't need to make a trade every day. You don't need to make a trade every 15 minutes. But when you see a trend changing, like what happened here with Tesla, you need to pay attention to that and move accordingly. So again, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Tesla to me, long term, looks great. I still think this thing has massive potential. If we go from the bottom back here in June of 2019, if we go from that bottom, this looks like a 1. That looks like a 2 to me. Came down to the 618 retracement of that Fibonacci level. Came down, found support, came back up here all the way from basically, that $70 range up to $900. If we, depending how violent this sell-off comes to, if we fib from the bottom right here to the top right here, we came back down to the 618. The 618 would be at the top of the 1. So we would have a 1, a 2, a 3. The 4 would retrace no lower than the 1 on highly leveraged markets on a long enough time frame. That looks like a very high likelihood potential target for Tesla down here. Now, could we find support up here and continue to the upside at one of these other targets? Yep, I'm looking at specifically, $500 as a target. But Queen Kathy is not just going to prop up Tesla on her own. These people are not whales in the markets. Just because they use social media and have, big funds does not mean that, they can just pick bottoms. They can try to, but it's not going to work. When the market decides it wants to go down, all the Queen Kathys, all the Meet Kevins, all the MicroStrategy Michael Saylors in the world are not going to save you. The same way that Peter Schiff is not going to tell you that gold's going to go up and all of a sudden it goes up. It does not work like that. That's why technical analysis is so much more important and more useful than fundamentals. So let's pay attention to what's happening right here. Do we have to come all the way down to $250? No. Is it likely? Not necessarily. Could we turn around at like $350? Could we turn around at $480? Yeah, for sure. But let's wait until we see some kind of strength in this market before we just start calling out bottoms and, assuming that everything's just going to turn around and go back to the upside. Because the point of technical analysis is not to always catch the top and always catch the bottom. It's about getting all that meat in between. So that's what we're paying attention to, paying attention to moving averages and what happens here short and long term. So, all right, let's take a look now at silver. All right, what's going on with silver? I mean, exactly what we said. Everybody was saying the silver squeeze. There's no more silver. We're out of silver. Exactly what I said happened. We had this support. Broke down from it. Came back up. Resistance turned support right here. And then since that last video, what has happened? We sold off from $27 down in one candle to $26. Exactly what I said. The heart line of the channel. Top of the channel at 30. Bottom of the channel at 22. Sold down. Held for a second. Got a massive sell-off again. Back down to 25. And what would I expect to happen? Our measure move to take us back down here all the way to like 23. It's technical analysis. All the fundamentals in the world aren't going to short squeeze silver. There's massive amounts of paper in this market. So until that changes, or until the people that are controlling all of the paper and all the leverage and all the banks and everybody decide it's time for silver to go up, it's not going up if they say it's not going up because some people on Reddit said to buy it, or because, Robert Kiyosaki bought all the silver that was available from an exchange. It doesn't work like that. Keep buying silver as it goes down. That's fine. I'm a bull on silver long term. What could happen on silver? Keep in mind, paper markets sold off down to $12, when everything crashed. I'm not saying it's getting down to 12, but the measured move of this breakdown here, would take us basically back down to like $17. Do I think that's likely? No. Is it possible? Yes, it is 100% possible. So we're paying attention to that. But in the meantime, what would I be focused on? The 200 moving averages right here. $24 looks very likely. The bottom of that channel looks very likely down here at $22. This could happen quick. Obviously, now we have the 8 and 21 cross to the downside. We've broken down, from that 89 moving average on the daily. We did that once before back here and touched the 200 almost immediately. So short-term target, $24. More of a long-term target back down here at the bottom of the channel, $22. If the bottom of the channel, down here at 22, top of the channel here at 30, if that breaks down, we need to pay close attention to like this $20 support area, because we didn't put in any support since back here. There's no support above $19. If we lose this support at like $20 right here, $22. There's no support until back here at like $19. That's very strong support. I would expect that to catch price no matter what. Are you going to be able to buy silver for that price? No, probably not. People aren't going to sell it. They'll keep the premiums high. Everybody will be buying. It's not until people capitulate on something that the actual like premiums are going to come down. So, don't get too excited trying to buy $20 because I said that that's a target. But, I wouldn't put it past the market either. So let's switch over now and take a look at gold. Exactly what we said. You just go back and watch my old videos. I'm not going to go through the whole. We're in the channel, fake out, breakdown, measured move, hit the measure move. We're at the bottom of the channel in orange right here. I would expect us to find temporary support. They were saying we'll never get down to 1700. We'll never get down below here. Well, look where we're at right now. We're in the 1600s, $1,695. There's a ton of support through here. Could we hold? For sure, we definitely could. We already broke down from the 377. We're down at the 528. First main target that I'm paying attention to is this fib level. Let me zoom this out. We already broke down massively from the 236. We're already halfway down to the 382. That's my first main buying level, 1600, high 1500s. After that, this is probably where it would stop. I think 1475 is probably the lowest we're going to get. Could we come all the way back down here to the breakout, to that like 1350 range? Sure, it's definitely possible. In a deflationary scenario, in another capitulation event, we definitely could. So pay attention to it, but I wouldn't get too excited. I think that it is a absolute godsend to get gold at 1475. It's not too far off of a blessing to get it at 1600 again. But it's not a bad idea to basically move some of your other profits into things like physical gold, physical silver. So even if you're buying on the way down, the likelihood of seeing a massive sell-off like you see in gold and silver, the same way you would see it in something like Tesla or, one of these other like trash stocks, not nearly as likely. And if it is, it's on paper. You're not going to go to the pawn shop. You're not going to go to a website and find gold at $1,300 or silver at $12. So you don't have the same temptation to sell. It's also a pain to sell. You got to ship it out, all this. So if you have trouble with strong hands, with them diamond hands, if you got those paper hands, go out and buy physical stuff, because it's a lot easier to dump your stuff during capitulation digitally than it is to actually drive to a store and make an irrational decision and sell it or mail it off to somebody. So, I think honestly, always moving into physical gold and silver is a great idea, especially with some of your profits along the way. So, all right. So I think that's it for commodities we're going to take a look at today. Let's switch over and let's do a little cryptocurrency. All right. Bitcoin. Been paying attention to this, obviously. We had the one false breakdown back here, crossed 821 to the downside, put in that support. We were able to find support at the 50-55 and move up basically got that exponential move back up here. Say Elon Musk saved it with 1.4 billion and a couple tweets. Say Michael Saylor saved it. Say Square saved it, whatever. Oh, I do want to talk about this. People are always getting extremely excited about things like Grayscale, Bitcoin Trust, or Square or PayPal or whatever, buying these assets. Well, let's keep in mind that they're not just buying them for themselves. They're buying them because you're buying them. People buy these things with money, and then they have to go out and buy the actual physical asset. So if you buy Bitcoin on PayPal, PayPal doesn't actually give you Bitcoin. You can't get your private keys or whatever. But if they don't want to take a hit, which they don't, they want to make a percentage. They make 2% or whatever when you buy Bitcoin. So they literally take the money you use to buy Bitcoin, and then they go buy that Bitcoin, and they hold the actual Bitcoin. And then you have numbers on a screen that says you own a share of Bitcoin. But you don't actually own crypto. You don't get the hard keys or anything like that. You don't actually own it. And it's the same way with all this stuff. With Square, you don't actually get the Bitcoin. You just own shares in a Bitcoin ETF, basically, or a Bitcoin fund. Same with Grayscale. Grayscale says we'll never sell Bitcoin. You put your money in Grayscale, they go out and buy Bitcoin. When more people buy it, they buy more of it. They don't, they're not buying it for themselves because they're bullish on Bitcoin. They're buying it because they charge people a premium of anywhere from like 2% to like at one point in time, I think it was like 50%, not too long ago, over how much Bitcoin they actually hold. So if their fund is worth, let's say, $1 million, and they charge you a 40% premium, they go out and buy $1 million worth of Bitcoin, and they have $1 million worth of Bitcoin, but the fund is worth 1.4 million because they were charging a 40% premium. Now, granted, that's a simplified version of what they do, but they're not bullish on it. They're bullish on making money off of percentages. So they're getting you to buy it, and then they're charging you extra. So the only reason people will pay a premium is because there was not an ETF at the time. Now there's things like the Canadian ETF and probably an American ETF not too far down the road. So what's the likelihood people are going to pay 40% premiums, to get this stuff into, their portfolio when they can just buy the ETF at a 2%, 3%, 5%, 10% premium, no premium, probably zero. So I think the, time frame of things like MicroStrategy, or Grayscale are, they're going to be relics. They're going to be outdated here before long because all they are is just a way to basically buy Bitcoin legally when there's no ETF. And now there's an ETF, so let's see what happens. So anyway, now exactly what I said happened. We need to pay attention here. We broke down from the 821. Looked like we're about to get the cross to the downside. I told you exactly what was going to happen. We're going to massive pump up here. We did. We came back up. We took out the parabolic SAR. And then look, showed massive weakness. Bearish engulfing candle. Selling off below the 8 and 21 now. Getting ready to cross this to the downside. If we close another day below this, it's basically going across. And then our next target is going to be that 42,639. Excuse me for a moment. All right, so we are at 46,800 right now. Our next target to the downside is basically going to be the retest of that previous top, which also lines up perfectly with the 50-55 at 42,500. If we do come down there, we're going to take out the parabolic SAR again, and then we'll continue basically this red parabolic SAR to the downside. Next target is going to be the 89, probably around like 38,000. We're very close to putting this trend in jeopardy. It looks pretty bad on the daily, but could play out like this and still be okay. But when we start going to these longer time frames, that looks real bad. That looks real bad. Massive bearish engulfing candle on the weekly. Massive rejection candle on the weekly. We still got 3 days for this to play out, or 1 day for traditional markets, for like futures, but looks real bad. 43,000 looks very likely right here. If not, I mean, we haven't retested the 21 moving average since back here at 10,000. So I would expect a retest of the 21 if we break down from there, 32,500. And if we do, I would expect a massive bounce back up. But just picture, what this would look like if basically that plays out. Just picture what this would look like, okay? Let's look at basically a shoulder, a neckline, a head. We break back down and retest the 21 moving average back down in here. We come back up and retest the 8 moving average as resistance, to support flipped resistance, and then get rejected, come back down to the neckline. It's going to look like a massive head and shoulders pattern starting to play out. And if we get a massive head and shoulders pattern, we would take the measure move from the top of the head to the neckline down here. And if we do get the breakdown from that, what is our target? It looks like it gets bigger as we go, but it's only because it's by percentage. And, that's $6,365. Do I think we're going back down to $6,000? It's not likely, but it sure is possible, because what would that be? That would be a low, that would be a higher low, and then that would be a higher low. So it doesn't seem, impossible to me to do something like that. I think it's much more likely that we came down here to like 12,000 and found support. Again, depending how long it took, the 200 moving averages could be way higher up, but I wouldn't put it back past the teens at this point in time. I think it's very likely that if we do breakdown from a topping pattern up here, that we're coming back down to like 18 to 20,000. I think it's very likely. So be very careful on this one. I've been warning everybody. And again, I'm not saying it has to be over right now, but it sure doesn't look good. And we talked about this, what the tops look like on the monthly. And what does this look like on the monthly? If this thing starts to sell back off here, it's the beginning of the month. But what did we do? Just like I talked about, we got a wick up and then a massive bearish engulfing candle. We got a wick up, tried to push back up again, and then boom, consistent selling. So we got a wick up right here, failed to put in a higher high. Here we have a high, failed to put in a higher high, bear market. Failed to put in a higher high, high here, failed to put in a higher high, mini bear market. Failed to put in a higher high. What's the next thing that's going to happen here? We're going to start hitting these key levels. So the 21 on the monthly, followed by the 55 on the monthly, the 21 by the monthly, followed by the 55 on the monthly. So the 21 on the monthly is going to come in back here at 18.5, which is that previous top right there. We are in the bullish control zone, hard sell. We are in the bullish control zone, potentially leaving that bullish control zone if we continue to sell off here. This is already sloped to the downside. We got to be very careful right here. And if we do come down to the 50, 55, we could be retesting like 14, 15, 12. Not unrealistic to think that we could be getting a massive sell-off. It's not going to happen overnight. I do not think we're just going to capitulate down to nothing, but I sure would pay attention to it. Make sure that, we're logging those profits along the way. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. 8 and 21 cross. That's what we're paying attention to. Trade with the trend. Moving averages are your friend. Dogecoin. Been a while since we've taken a look at this. This thing has been looking like it wants to die for a while. It's been trying to hang on to essentially this resistance flip support right here. That was our resistance back there at 4.5 cents. Found support right here. Found support right here. Found support right here. Found support right here. But what is this really just looking like to me? It's looking like a big old descending triangle. It doesn't look good. It doesn't look good. It looks like a big descending triangle. And if we do sell off from here, basically the target from like our top to our bottom of the descending triangle. I'm not going to draw this out all crazy. But you can't even do a target on this thing because it went so parabolic. The target's going to take it down to like negative. The target for this would be down to 1.2 pennies. So, and which is conveniently the 200 simple moving average. So you got to be careful with this thing. I mean, if this decides to die right here, our next target to the downside is 3.2 pennies, and then after that 1.6 pennies, and then after that as low as 1 penny. But this is a meme coin that went parabolic, so it wouldn't be unrealistic to think that this thing just straight up dies. So, well, it goes back to being dead, I should say. All right, so let's take a look at Ethereum now. Ethereum, we're going to ignore the massive capitulation wick on Kraken here, but that is the chart that I have up here. We basically topped out. Basically topped out back here at 2,000. Come back down, found support at those key levels. That was our previous all-time high. We put in the triangle, break from it, came down from it, find support. This is going to be a key support level at 1400. If we break down from that, it's going to look real bad. There's definitely a possibility we come down to like the 200 exponential, $950, or potentially the 200 simple, $785. There's potentially topping out here. Got to pay attention to it. Does it mean that we're topping out and it's all over and we're done? No, it means whatever Bitcoin does, this thing is going to do. But again, let's take a look at what actually looks like is happening right now and, get a better idea. We topped out right here, got a massive bearish engulfing candle, tried to push back up again, and then bearish engulfing and massive downtrend, sold off over, I want to say 90% from the absolute tippity top to down here. 95% of its value we lost. So probably should be careful here because that's a top, massive bearish engulfing candle, attempt to push back up. So, what's realistic to think? Are we going to come back down here to $440, 78%? Are we going to come back down here to, $300, 85%? Sure looks likely. Definitely a possibility. It's not going to happen overnight, but, it's better to pay attention to these things ahead of time and think, that seems unrealistic, but it's at least on the possibility list. Ethereum's been weak through here. We got the 821 cross back here, a week ago, and it's basically just been consolidating, praying for Bitcoin to save its life, and it's not happening. So, let's be careful on this one. Definitely make sure we're logging some profits. This thing has had massive gains. I don't have to tell you that you should be taking profits along the way. Tlry, we looked at the other day, jumping out of cryptocurrencies real quick just to see. This is the same as Tesla chart. Bottomed out right here. Got the 1, got the 2, basically like a 60-something percent retracement. Got the 3 massive up here. Selling off, just like we said on the weekly. I would expect it to come back down potentially around the top of the 1. So this is a key area I'm looking to buy back in 1270 something. We got all the way up to like $70 basically. So anywhere around here is potentially a nice place to start buying back in. But this is another one that's like, we got the cross back over 8 and 21 back here at 750, which is when I got interested in this again. And this is it is definitely one of the stronger pot stocks. We're above the 200 exponential and 200 simple, both slope to the upside. So if we come back down to the exponential, that's $15. If we come back down to the simple, that's $10.75. So anywhere along the way in there, I'm looking for interest, but I'm going to wait for this to start showing strength. We already crossed 8 and 21 to the downside. So, I'm looking for one of these key moving averages. I'll probably start taking some buys around $18, but I'm not trying to catch a falling knife on this thing. There's no reason not to just wait and see when we see some strength and get in this, because if this thing starts going back to the upside, and starts to play out that wave 5, 1, 2, 3, 4 comes back down here. If we take our Fibonacci extension for wave 5, even if we just get still stay in a bear market overall, but get a 78.6 or 88.6 retracement, we're talking about 120 to 180. If we get the overall exponential, Fib extension measured move, we're talking about over $1,000 for this thing. And, what are we at right now? We're at $22. I'll take a 50x. So, we'll pay attention. We'll see what happens. You don't want to get too excited on this thing. Wait for it to look like it's putting in a bottoming pattern and move back up. I'll keep touching on this thing, obviously, but I would expect all these pot stocks to move together. Just some to show more strength and others, obviously show a little more weakness. So, platinum, same thing. It's doing what silver and gold are doing. This thing could take a serious hit just because it came down from 575 all the way up to like 1400. I think it was probably a little undervalued still overall, but proportionally it's probably not going to decouple from gold and silver. So, I'm really paying attention to like this $1,000 level, after that 950 level, after that, 860 level. But, there's a lot of support built up along the way from here. So I wouldn't expect it to just like die or anything. I think it's still undervalued overall. So what else do we want to look at? Tezos has not been doing much. I mean, we sold the absolute top right here. Anybody that took that trade, congratulations. I told you about it ahead of time. Told you exactly where I was taking profits, and that's why we took profits, because from there, it basically sold off 50% like immediately. 50%. Tried to get back above 821, still crossed to the downside. It's dumping now, showing weakness. I would expect it at least to come back down here to 320, maybe 280. After that, who knows? I mean, like I said, if we go back into a bear market, these cryptos are going to get absolutely wrecked. These altcoins are going to get absolutely destroyed. So, all right. Did we miss anything that I want to take a look at? Basic attention token. This is another one we talked about specific targets with the buys when we decided to buy. This was one of the ones that was lagging behind everything. Once we got back above the 200, started showing strength back here. Took a buy anywhere from like that 25 cent range. That was obviously a great move because from like that 25 cent range, I took quite a bit of profits back here at like 70 something cents. I think it was right at 70 cents, I believe I sold. I don't think it was right at the tip, was it? Yeah, I guess it was. I guess I did sold the absolute top back then. That was 175%. I sold, it might have been 69 cents, but it was right here. Sold back off, reaccumulated. When something doubles, the best thing to do is sell half your position, sell half on a double, and then you can stay in it with the rest and it was free because you still have half your position, but you have all your money back. So when you take a rebuy back in this area again, and then, sure enough, it bursts back up here again, and then look, you're almost double again, and you're doubling free money, So again, went ahead and took some profits at 80 cents right here. I did not expect it to go down exactly like that, but I was surprised to see this thing break back above. I did not think it was going to take out that high again. So could we consolidate here and continue to the upside? Sure could. Is it likely? Probably not. It's probably going to do what Bitcoin does, but I actually very bullish on BAT overall because it's an actual crypto that has like a functional utility. If you're not using Brave browser, I highly recommend it. It's absolutely awesome. So, all right. So BAT. I think that's probably going to do it for today. Like always, if you guys have any recommendations or requests or anything, feel free to drop them in the comments. I never mind taking a look at specific assets. Obviously, trade all these different markets. Sorry for anybody that's getting absolutely crushed in these markets right now. I can't say that I didn't warn you. Can't say that we didn't see it coming. Should be taking profits along the way in everything, in all these assets. And, that way you don't have to worry about it. But, lesson learned. Obviously, we've seen a lot of this, all of this coming from a mile away. And I haven't been warning you about the top for 2 years or 5 years or 10 years or whatever. I've been warning about the top for like a month. And again, if that changes, I will change my view as well because I am dynamic in these markets and I'm an actual trader. I am not I'm not in a cult. I'm not in a cult of crypto or a cult of Tesla or a cult of gold or whatever. I buy and trade all these assets. I make money off them. I accumulate them. I acquire wealth over time. I don't have the nicest house in the world. I'm not the richest person in the world, but I own everything. I have zero debt. I own my own home. I don't have to worry about anything. So, not a lot of people can say that. So going into this whole situation, I have been in and out of the stock market. I am still in the stock market, but the majority of my positions are not in the stock market because I saw this coming. And the same way that, I'm in the crypto markets, but I'm taking profits along the way. I consistently move profits from the stock market and the crypto market into silver and gold. So even if I do take a hit on some of my silver or some of my gold, it's still, to me, like a savings account for like physical stuff. All right. So live below your means, save your money, educate yourself, and be smart and get yourself some financial freedom over time. Don't be a sucker in this game because escaping the rat race and escaping this whole like I need the nicest car and the biggest house and the newest shoes and the most Tesla stock and I'm always going to be bullish on this. I'm going to decide that gold's going to $1 million and I'm just going to hodl. Well, for all the people that were saying gold is the answer for the last 5 or 10 or 20 years, think about how much gold they could have if they just invested in the stock market or cryptocurrency and then used their profits to buy gold. Same thing with all the people who said Tesla's overvalued. Sure, Tesla might be in a bubble, but let's wait until it pops and then get out of it when it's about to pop. And that's exactly what we did. And same with Bitcoin. Let's, take profits along the way, but let's wait and see if this bubble pops or if we're able to save price action and continue on in this uptrend. And, it's the same way for everything. I don't sell my gold and silver. I trade paper gold and silver when I want to, take out a short position or cover myself or whatever, but I don't sell my gold and silver typically. I'm not doing that. It's a savings account for me in the same way that some of my stock portfolio is permanent. You want to have, if you don't have an IRA, an IRA in the United States is a free 6,000 non-tax-free dollars every year. So whatever you're making, you can take an extra $6,000 free of taxes, because all you do is invest $6,000 into a IRA or a Roth IRA every year, and that's tax-free. You pay taxes on the Roth IRA when you put it in. So if you think you're going to be in a higher tax bracket in the future, you pay taxes on it now. So if you pay, 30% taxes on it now, you have 30% less money to invest with. So you end up with 70% of your money. So in order to get back to the 100, it needs to go up 50%, but your taxes are done. Or you can take a regular IRA and, you can take that same $6,000, put it in the IRA, and then when you take it out, you pay taxes on it. So even if you're in a higher tax bracket later on, you start with the full $100. So you don't essentially need to make that extra 50% on the way up to account for the taxes that you've already paid. So you can pay 50% taxes later on that money, and it's accumulated in value because you had a larger principal of your $6,000 to begin with. Therefore, either way, it's great. And the fact is if you make $20,000 or $50,000 or $100,000 or $1 million, you can still put $6,000 every single year into an IRA and not pay taxes on it, or, depending obviously if it's a Roth IRA. But that's basically tax-free money. So if you're making $50,000 a year and you're writing off, the standard deduction plus a couple kids or whatever, so you're paying tax on $30,000 instead of your $50,000, why not just pay tax on $24,000? Put $6,000 into a IRA or Roth IRA and don't pay tax on it. And again, I'm not an accountant. I'm not a financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly, talk to a financial advisor, talk to an accountant. But you literally are leaving free money on the table if you're paying taxes on all this unnecessarily. So, be very careful. Look into it, learn about it, and, invest in your future, invest in yourself. And, you can put silver and gold, you can buy physical silver and gold from various places and put them into an IRA and get they basically store the physical for you in an actual vault somewhere, and you pay minimal fees and don't have to pay taxes on it. So, again, not financial advice, but, learn about this stuff, educate yourself. They don't teach you how to do your taxes in school. They don't teach you about IRAs and savings and time value of money and stuff like that in school. But, those things are so important, and they don't teach you because you're part of the system and they want you as a debt serf or slave or whatever. There's a reason they don't teach you this stuff, and they teach you useless mathematics and stuff like that. So take the time, educate yourself, and you'll benefit for it the rest of your life. Why don't they teach you how to do your own taxes in school? It makes no sense. You're going to do taxes every year for the rest of your life. So what's one thing that's useful to you every year for the rest of your life? Learn how to do your own taxes. Why don't they teach it to you? Because then you'll get smart. You'll start learning about money. And I learned about this when I was very young. There's something called the Rule of 72. And if you've never heard of the Rule of 72, this is about to change your life. Not as much now because interest rates are trash, but essentially you take the number 72, okay, and then you divide that by your interest rate annually that you're going to get on an investment. So let's say, for instance, 6. So we're going to take 72. We're going to divide it by 6% interest annually, and we get 12. So what does that 12 mean? You will double your money every 12 years at 6% interest. So if you put money away one time, if you put $1,000 away at 6% interest, 12 years from then, it will be worth $2,000. If you make regular deposits into that same account, every $1,000 you put into it will be doubling every 12 years. So it's exponentially beneficial. If you put yourself in a situation where you're making 12% interest, it takes 6 years for that to double, because you take 72, you divide it by 12, you get 6. So every 6 years, your money is doubling. So if you take $1,000 a year, or let's say an IRA, $6,000 per year, and you put it in somewhere where you're earning 12% return, on average, let's say you put it in whatever, stock market, crypto, gold, And on average, over that period of time, you're making 12% a year. Every 6 years, it doubles. So if you're putting $6,000 in the first year, after 6 years, that $6,000 will be worth $12,000. And then in the meantime, if you have put in another 6,000, another 6,000, another 6,000, another 6,000, think about how fast you will be saving money over time. And I understand maybe you don't have $6,000 you can put away. Put away $4,000, put away $2,000, put away $1,000. Sell your, extra car, sell some of the stuff you have around, and make sure that you take advantage of these, write-offs and investment opportunities. So, the skills that I teach on this channel will change your life. They will free you from a system that is designed to enslave you. So, you don't have to pick the best stocks or the best investment. You don't have to learn every little bit of technical analysis. But if you learn the basics, you will be exponentially better off, because you can if you learn when an asset crosses above on a longer time frame, it's 200 daily exponential or simple moving average, and you start to just ladder into an uptrend over time, and you use the time value of money to your benefit, and you use tax breaks to your benefit, and you use investment, and you trade with the trends, you will win over time. It's an absolute proven fact. You can go read books that are 100 years old, 50 years old, whatever, 30 years old, 10 years old, 20 years old, whatever it is. You read these books, and moving averages are proven successful, exponentially successful over time, and by far the most common used thing. All the other junk, great tools. All the indicators I've created, great tools. And they're awesome for everything from long-term investing to scalping. But the fact and swing trading and everything in between. But the fact of the matter is, you don't need every tool in your tool belt to, fix a drain. If you got a leaky drain or a broken car or whatever, you don't need every single tool. You need enough tools to fix it. And that's all I'm trying to help everybody do, is have enough tools to fix it so that you can benefit long term from these things. And the more tools you put in your belt, the more things you can fix. So at first you might just have a wrench and you can fix a couple things. After a while you might have a socket wrench, you can fix more things. After a while you might have a pneumatic hammer, you can fix more things. After that you got a full set of drywall tools, you got roofing tools, you got an air compressor, you can build a freaking house on your own. And that's what we're doing here. We're building empires together. So I think I'm going to call it there, guys. Appreciate all the support, love in the comments, shares, likes, subscribes, all that stuff. You guys are awesome. Love y'all. Everybody stay safe. Lock in those profits, make that money, keep grinding, and before long, I guarantee you will see the results. So remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto trend trader, and I'm outie.